Good evening, ladies and gentlemen. This is Clueless Aid Trading Frank. Thank you for attending tonight. After all, it's a summer evening, even though it's a bit rainy here on the East Coast due to the hurricane that's barreling down towards down towards Florida and North Carolina, South Carolinas. So we're getting part of that rain. Despite all that, I do thank you for attending here. It's approximately 8:47 p.m. I'll keep this short and straight to the point, cover as many important points as possible for the week ahead, which I always do. Full disclosure, this is purely for financial education and not for any solicitation or advice. And session will be recorded, uploaded to the Clueless Aid Trading YouTube channel. You've heard me say that hundreds of times. But keep in mind that everything that we do on the free webinars, the multiple, well, at least 3 times a week or so, strategic video cast, which are the same as video blogs or video logs, whatever they call it these days, are on the Clueless Aid Trading Google YouTube channel. Certainly follow our Instagram as much as you can. We need more follower accounts. That's primarily for promotional exposure, but it certainly helps us when all our members follow us there. I try to put as much stuff as possible. My ex-marketing guy who was doing that decided that it was too much for him. I have no idea why, because it's simply a matter of copying and pasting my precision content out there. But I decided to take over, and like they say, when the content creator takes over, things just go better, and that's just like the way it is. So this is where we are right now. So so let me begin, and let me get this screen out of the way for now. Close this out, and then we come back to our other lovely screens. So I'm going to quickly walk through a couple of things that I'm noticing, a couple of broader points, which I obviously need to make. So I'm going to put this lovely, 1 second. Lovely blackboard back there, and then just put out a couple of points that I am looking at. Stroke color should be white. Background color should be, stroke color should be black. And boom. So let me write a couple of things here, okay? So we have white and black. Okay, that's fine, doesn't matter. I want it to be a little bit more stylistic and put white on black, but hey, so test. Good. So here are the points. Risks in the market. We already know what they are. We live with it every day. Trade friction, trade tariffs, trade war. Let's just put that's brewing. We have to deal with the sudden announcements or just comments. They're not even policy announcements. Keep in mind that the trade war or the proposed billions, and over the weekend, President Donald Trump basically proposed he would basically add another 267 billion. I have no idea where the numbers are going. But hey, that's just the way it is, you know. Governments in power tend to basically do what they need to do. Some, I certainly, as you all know, support the whole Trump administration agenda, aside from a couple of business points, which I think, at least from a political standpoint, is absolute hogwash. My feelings are always the same, and I've stated that very clearly, that attacking individual U.S. businesses on any front where they have really, where they're not grossly neglecting and doing something terrible is absolutely wrong. Socialist communistic governments tend to do that, and regardless of who's in power, even though, you know, including President Trump, I personally believe, that's my personal feeling, that attacking individual U.S. companies on a political merit is absolutely wrong. That's just not the way we do business in America. This is not what we are. But hey, do what you want. Eventually, U.S. business is what runs the country. That's who provides the jobs, and they will prevail. That's the way I look at it. So, okay, trade wars and tariffs are one of the biggest risks. And this includes China, Canada, and a quick point I wanted to make. Notice how everything was so dead quiet about the war front, about the trade war front, aside from a comment made by Donald that you know, at a speech that he might be looking, or at a press conference, I think that he might be looking to add another 267 billion over the 200 proposed billion. So aside from that, there was really no official announcements. I didn't hear anything about the Canadian part. So no news is good news, all right? So just stick with that. No news is good news. We had a lot of winners on the earnings fronts. We had companies like Avago. We had Ulta Beauty, which is our swing trade, hitting new highs. Calls just exploded. I had some left there, as I know I told you it was going to go to new highs. You certainly review my previous charts. The 275 calls that expired on Friday, they went from $2.45. We'll talk about that later, to $12.90. I caught a good chunk in the middle because they're expiring on Friday. And the ones for September 14th, which were the primary ones that I recommended, again, the 275s went from $4.68 to 12.51. These are big moves. You're talking about a nice 200% type of move. Can't beat that. They closed at 468, they went to 12.51. We had a huge winner in five below. We had Avago, which is a beautiful mover, still going higher, goes on. So no news is good news on that front. What else risk do we have? We have political risk, which I think is minor. I know all these things about whoever this so-called deep throat is writing in the New York Times, which in my personal opinion is somebody stating their own opinions. It is a very unusual thing. I personally think it's a direct attack on the U.S. presidency. Um, I think it's kind of wrong, if you ask me. But hey, it's a democracy. Anyone can say whatever they want. They chose to do it anonymously, and they'll probably find the person. But if it's somebody really high up, it's going to create some upheaval in the market, just so you know. Okay? So there's the political risk involved here. We are, after all, free speech. So they want to put their name there and go out there and I read the whole thing. I mean, it was an attack, but there was a lot. You could tell that person wasn't like a real left leaning liberal Democrat or a Bernie Sanders type, like just that's it, just tax everyone to death. It was somebody who's a Republican who's in the White House. Seems like they have there's somebody higher up. I read the piece in the New York Times. It's curious on that. So the person has some clout. Let's just put it this way. And they're not total like dumb Trump haters. There's somebody who seems like there was some concern involved there, but I don't want to get into that. There's too many like gray areas there. So that's the political risk on that front. What other do we have? We have some EU political risks regarding autos, which seems like next week they're meeting again, which is a good sign. Uh, Good old Donald likes to just throw things off left field, which is the most annoying things for traders and for the markets. He says, okay, if Japan doesn't listen, possible trade war. I highly, highly doubt it. Okay, that's another risk. I mean, he starts another trade front with Japan. I don't know. Okay, so the bottom line is that these are the main risks in the market right now. Um, the biggest risk in the market, these are the periphery risks, I should say. Believe it or not, is emerging markets. Okay, just keep that in mind. Anytime you see that this currency situation in emerging markets, if one of the big emerging market economies like Turkey, South Africa, and other peripheral ones that are out there uh, do submerge, you will see a contagion effect which will hit our U.S. markets in a big way. Short term. Short term. Okay, that includes Russia. So the ones which are emerging markets that we are talking about, just so you guys know from the broader perspective, emerging markets, Turkey, very strong economy, guy's being stupid as hell, release the pastor, get himself out of the misery, but he's sticking to his own guns, go through the political process and all that stuff, court system. But anyway, that's the way they do it. Um, So Turkey, which is a NATO ally, and Erdogan is actually, was and I believe still will be big buddies with Donald. They've liked each other. So Turkey is one. South Africa, which is probably one of the most corrupt, semi-developed countries, even though they call it emerging markets. South Africa, that's in existence. Then you have what's the other one that? Oh, in South America we have Argentina, which includes Brazil. Not as much though. Brazil has more political crisis than economic crisis, and the ripple effect coming through. I'm just missing my head here. So these are all to do with currency collapsing. Okay. What was the other one? Turkey, South Africa, Argentina, Brazil, Mexico is fine because we kind of working things out with them, which is a real positive. But for now, these things. Oh, Russia. What am I thinking about? The Russian markets, believe it or not, Russia is such a powerful country, yet they can't feed their people. What a shame, huh? Uh, Keep on stealing your own money, the oligarchs, and doing all kinds of stupid things, putting our leaders in trouble. Uh, and trust me, I know a lot of this crap. Um, and buy $30 million. That's cheap, actually. $100 million mansions in the U.S. and primarily in Europe. And so Russian ruble has been collapsing. I was just telling my wife we should actually go visit St. Petersburg because the ruble's so dirt cheap. Russia's a beautiful country. A lot of good friends here, and I would love to visit St. Petersburg, Moscow, and a couple of the other historical places, certainly. St. Petersburg for sure. So the Russian ruble collapsing. So these are the emerging markets in the way which are very much on the target. So big money managers like the Templeton funds, what is it? Mark Mobius, and those people, they worry about these things here because if any of them really collapse, that is going to have a serious contagion effects on the U.S. and European markets. And let's keep in mind, even though it's not a full emerging market, we have China, because the Chinese markets have been really crappy, even though they've stabilized at certain levels. So these are the things, and the Chinese currency is certainly not collapsing. But any of these markets go through, these are the real trouble spots, okay? China can control the economy. They're powerful. They have a very good state capitalist system. Remember, it's a state capitalist system, which we don't want to be. We don't want the government to tell us what to do. We certainly don't. All right, telling our companies what to do. So that's China does that. That's their way of doing things. But we don't certainly want to follow that example. I'll tell you that. So yeah. So bottom line is, so that those are the risks. All right. So we move on further. So just keep that in mind. These can happen, and this is what traders have to live with. Okay. I can have the best charts in the world, and I certainly do have some amazing technical charts. Okay. So traders, the real traders in their own way, I'd like to say, everyone's a real trader if they have money in the market. So real traders um, basically always sleep with one eye open. Okay, I do. If you have too much exposed on positions, you certainly sleep a little bit. And I'm certainly very calm guy. My blood pressure is like as normal as it can get, but I always keep an eye on things. Always sleep with one eye open because, and what does that mean? So what that means is it doesn't matter how great the charts are and everything, and my disciplined approach on managing and putting out my forecast. I just don't do it like a little teenager. All right, who just wants to go out there and party. I mean, we're doing it in a very systematic way, and oops, sorry, we're doing it in a very systematic way. But let me just bring that board in. What happened here? Ah, there we go. We're doing it in a very systematic way, but all great plans can just come to an end on an overnight situation, and everything goes wrong. And that is what the overnight volatility, which we cannot control. Doesn't matter what I do, doesn't matter what you do. It's just the way it is. So the biggest risks, so what I believe is the most dangerous, let me erase it, unquantifiable, and listen carefully because this matters to all of us, guys, okay? Unquantifiable, what we call black swan, which we predict, but it just arrives. Okay, it's not really a black swan. It's more like a gray swan. How about I call it a gray swan? Because we know what the risks are. A black swan is like when you have no idea what the risks are. Okay, I hope everyone understands that. So this is more like a gray swan. We know what the risks are, but we don't know when it, like they say, excuse me in French, when the crap, I'm not going to use that word, shit hits the fan. Okay, I did use it. So we just don't know exactly when. Maybe it won't. So this unquantifiable risks, this is the biggest problem. A lot of them just happen overnight, and there's nothing we can do. What we can do is manage our positions, which I keep on always telling people, MYOT, manage your own trades. On large trades that you're up on a lot, you got to take down profits and keep core positions intact. So you're in the game. Core positions intact. When you're completely out of the game, you never catch the big moves. You know that. So that's the simplest thing that I can explain in very simple terms without trying to impress everybody. All right? Does everyone understand what I just said?
Yep.
Yes,
Mm-hmm.
yes.
And let me be very clear. Many of you are doing that. I know certain people are doing that. And they're doing it very successfully. Have some position. Have like, instead of having 4 contracts at $4, $5, or 10 contracts at $9, bigger traders always take bigger positions. Have one. Have one. Do their earnings baskets. Huge winners. Even Friday. Big winners. I mean, I'm talking sick winners. Five Below. What do I like about Five Below? I never even went to that store. You know, Avagum. That's it. Ex Broadcom. Like the company. Coming off the lows. Like the chart. Great winner. And other things like that. So bottom line is that the overnight risk is unquantifiable, and that's my biggest fear. Waking up to futures down 30, I mean futures down 20, and then recouping a lot of stuff back because we play the reversal trade. But it never feels good when current positions open down big time. We know that, but then we buy tactical lows, they start to bounce. What if it doesn't bounce? What there are some other Trump tweets coming out with some more harsh language on the global trade front. So those are the things that I worry about. Okay. So those are the risks. All right. So now we know sort of a bigger picture of what's going on. So on that note, let me just walk you through some charts. Let me start off with the broader picture. This is the wider picture, guys. This lovely chart, 2018. S&P 500, no E-minis, no futures, nothing. S&P 500. So far, still looking good. There's your consolidation channel. We have had multiple consolidation channels. You can see that. The last one ended on, look at the date below, on the 24th of August. Here was another one that we broke out of and created a bottom on the 15th of August. Right there. Looked like all hell was going to, go down. You turn the TV on. That's it. It's end of the bull market. Bingo. It was just a consolidation channel. I still believe, given what I see on multiple fronts, which I cannot describe in just one session, I certainly explain that much more in detail in the advanced coaching sessions that people sign up to, and I spend some time over the weekend doing that, and certainly on weekdays too, after market. Feel free to do that yourself. I personally believe that this is just another consolidation move based on multiple things. And the simplest thing is I'm looking at pattern symmetry on the full stochastics. Please kindly look at it. Let me just get the marker. Please kindly look at it. This was back on the middle of August. We came back and we retested this bull flag breakout, big time breakout. That's all we did. We retested it exactly. And the stows turn from here. I have a red line drawn here to the 14th of August. Is it possible? Well, futures are up 4.25 points right now. This is not a real-time chart. You guys understand that because it's SPX. We're going to look at the E-minis in a second. This is probably doing this right now. And when we look at the E-minis, I'm going to be correct. That's positive. So what does that mean? We're going to the moon? No, we're just going back and retesting the old highs. And then the market's going to decide what they need to do. And that's a lot of money. That's the way I look at it. That's the way tactical traders should look at it. We're basically trading ranges and patterns. Can we get up to 3,000, 2978? Sure we can. Sure we can. Deep down, this hardcore poker game, Trump style, Donald style, and I'm a New Yorker, and believe me, I know a lot about the Trump organization. And I always like to say, he's CFO from my days on Wall Street, and I think he's going to pull the card. I mean, I think he's going to, it's not a game of just winning. You just don't win. And what if you win this trade war and you completely destroy your biggest trading partner? Is that a win? No. Yeah, it's great. Like, oh, I just nailed that guy. Now he's bleeding and he's in the hospital. Great. So who's going to buy our stuff? That's not a win. But I think strategically, there's stuff going on which the U.S. politically, Donald is going to look great, and they will get a break that includes China and Canada and the European Union. There's a lot of imbalances, which I totally agree with. There's a lot of imbalances on how they deal with our U.S. products. But don't think we're some sort of lovely angels, just giving stuff away for free. Economically, we have screwed a lot of countries around the world. Even Donald said that during his campaign, right? Do you think we're such nice guys? No, we're not. But they have certainly taken advantage of anything, and then we're trying to fix the balance. That's it. That's competition, all right? Let's wake up. It's not like bad or good. The human race is good, okay? If you believe in God, all right? So we're just trying to compete and win. But we can compete and win to the point where we weaken them to the point where they don't want to buy our goods anymore. Then we're screwed. We win, but then we lose. Does everyone understand that concept? Yes? No? Maybe?
Yes.
Okay, so
Yes,
that's it.
sir.
And it's not just a political thing, it's just the
Yep.
way just the way it is. You know what I'm saying? So we gotta win, but they also have to have some semblance of winning so that they keep on buying our stuff. We'll take their stuff in, so we can get like that hardcore. So saying all that, let's just stick to technicals here for a minute. So if this happens, we will basically move up. We'll break out of the consolidation channel again, just the way we have done so many times. That's why I have these lines drawn, and all of your, it's a simple chart to read. These are all consolidation channel breakouts, and we're going to go retest the highs, which is up there in that 2920 level and stuff, which we almost kissed, but we didn't. And I think that happens. That's my opinion. If we do break below these levels that I keep on posting, which is this line here, that's a gap fill. Everyone see that? That's a gap fill. And just show you the bigger picture. There's your bigger picture on the Andrews pitchfork. And that bigger picture takes us all the way to 3160. That, in my opinion, happens by the latter part of this year, after October, going into the first part of December. I do believe if things form out the way it is, and we don't have a massive defeat initially, if we have a massive defeat on the midterm elections, the markets will fall. Then they'll rise. I'm telling you that right now, because it will be a political defeat. It won't be an economic defeat, because I don't think the hardcore Democrats and liberals are be able to turn back some of these terrific business policies that the Trump administration has put back in place. All right, that's just my opinion. So anyway, bottom line is, can we get up there at least short term? Can we get up to 2980? Believe it or not, we can, because this magenta line it's this channel. So technically speaking, we could do this. We could do this. We could come down here, bounce around, break out, come back and retest this. Again, this is the gap fill, and then boom, just go like this. Pull back a little bit. So now you've created, again, another cup, another handle, and then make a big move up here. Now, that moves us to the 3000 level. I'm not going to go that far, okay? Because I don't get like kitty bullish like that. But I think that just cleaning this up here, Is it possible that we can at least test the previous highs? Yes. Can we? Generally, when you test the previous high, you overshoot. So that overshoot brings us into that 2736, 2040 level. And then if we really overshoot, it'll be very quick, probably last a couple of hours, if not a day. And you certainly want to be taking profits. And I'll certainly be telling people to get the heck out of Dodge on some very fat profits. Okay, and that could be on some sort of negotiated deal coming up with China and stuff, which, by the way, this week is end of this month. I mean, third week is the United Nations conference, and there's some rumors or talk that good old Donald might just slip in and meet the Chinese premier if he's here, or the Chinese foreign minister. Do you know what markets are going to do? They're going to frigging go loopy higher. And Donald has a tendency to do that. Talk to strange people and get things done. And I love that. That part of him I love. Okay, that's it. So that's your bigger picture. Lower picture, if we break below this, we are going to test 2800. That's below the 2860 level. If we break that, it's going to be very quick, very sharp, and I'll certainly be shorting. And that's your level here, 2800. So if somebody asks me, so what do you think the market is going to do over the next couple of weeks? So I can say, okay, worst case scenario 2800, best case scenario 2900, and change 100 points. In the meantime, this at least the technicals are showing us that we possibly have a consolidation breakout. So let's take a look at the daily chart. Lo behold, I don't make this up. This is real time. And what does somebody see right at the bottom where I have this arrow here? It's starting to cross. Futures are up 450. Didn't we think that the world was going to end on Friday because the China tariffs, he's going to do that? He said, yeah, we're going to slap another 287. Then how about the official announcement saying, that's it, we are slapping the 200 billion worth of tariffs again? He didn't do it. And I was just like watching because I love this poker game, you know? I'm a crappy poker player. For a guy who basically predicts markets like a hawk, I should be a really good poker player. Don't you guys think so? I'm a great poker player in understanding, I think, human nature. But I just don't do cards. It's just not in my genes. My brother-in-law is a phenomenal poker player. Very smart guy. And he's in the financial business, too. He's a big real estate guy, too. But I just don't do it. I just love playing these theories because it makes us and me a lot of money and makes you guys a lot of money if you do it right. So look at this. That's all you got to know. So now this is where we are. This is still the consolidation channel. We break out over the 2900 level. We go retest the previous highs, which is E-mini highs, which is around 2919. This turn, stochastics, it's really as simple as that. It'll run for about 1 to 3 days, real fast. Okay? 1 to 3 days real fast takes us to what? Takes us to September 11, Tuesday. Very solemn day. I hope all of you people, say some real dear prayers and donate some, nice change to people and organizations that matter. It's a very solemn day. Remember it very clearly. All right? So, bottom line is 1 to 3 days brings us towards the latter part of the week, which is right after September 11th, which would be the 12th is Apple event, Wednesday. So by the time we approach, and I'm going to write this down, by the time we approach 9/12, 9/13, barring any major trade blow-ups, futures are up 6 right now. You can see it moving. You'll see it moving on the next chart. We should be retesting the highs real fast. Is it possible? No, not necessarily just retesting the highs. Yeah, I would say retesting the highs or at least getting over this consolidation channel. And you want to take down your profits at that time. Because by that time, we'll be back into that oversold zone where things get tricky again. And I know some of you are doing that very well, including some very strange member who goes by the initial of MB. All right? Congratulations. Gotta play these things. It's not that hard. It gets this overbought on the daily. Yes, it fakes people. Algos always love faking shorts and faking longs. When the longs start to get a little bit too cushy with things and comfy, boom, they they bang it down. When the shorts are starting to get like, oh, that's the end of the world, you start to get these big reversals. These big reversals don't last weeks and weeks anymore. Even though the primary trend is higher, they only last a couple of days. Take advantage of it. Make hay while the sun shines, guys. Okay? So bottom line is, this is what we're looking at. And that means that it gets overbought again. But this is exactly what I'm talking about. It is turning as we speak. And when it turns, it can sometimes do a double dip, which is a stronger buy. Just so you all know. It's a stronger buy. Give me 1 second, please. So it's a stronger buy if it double dips, like it did here a couple of times. And so be prepared for that. Or it can just be a unilateral move, crossover higher, and then moves up. So as long as this is going, keep on trading in our directly market correlated stocks. Things that I'm very selective in things I'm buying, as you guys know. And then some of you have your own ideas, which work out great. So, obviously that's the way to do it. Use your own ideas. If you don't have any own ideas, just buy mine. That's it. That's what my service is all about. So this is where we are right now. So this is the actual E-minis, which are up about 5 points right now. S&P futures, Japanese GDP just came out right before the session started. It was roughly about 3% versus 2.6% that we were estimating. That means Japan is growing, which is good for the global economy. Because Japan's a very strange economy. They're all rich, but they all work like crazy. They drink like nuts. They're great people, great history, but they don't seem to have any inflation, or which is good for the economy. In other words, prices of goods going higher. Very strange place. Love to visit sometime. Went there a long time ago. So let's look at the hourly chart. Oops, not on that. I already have it here. And this is what we're doing. Now, this is obviously the trader's chart. So if you're trading the SPX buys, you're keeping an eye on it to know when to take profits off the other side, on the front side with individual stocks that move with the S&P 500. As I know, I keep on reminding people. So at this point, what I'm looking at is on a short-term basis, we could be up tomorrow morning like 10 points. Which means that we would be hitting this level here, which was the big sell-off point right there, 29.82. I'm sorry, 28.93. No, I doubt we get to 28.93 by tomorrow morning. What I would say is that this level here, where we broke down from, is 28.83. So we could very well open up at that 23.83 level. And if you notice, and these are simple things, but very important to notice, this is where we had that quick, fast, and I told people to sell exactly at that level, if you remember correctly, on Friday. Okay, right there. That's an inverted hammer. I can adjust it a little bit higher, and you will see, and it doesn't take rocket science to figure this out, that this was the exact level where they sold the market. The futures trader hit the market. Look at the date down here on the 6th of September at 3 o'clock. And then exactly like I pointed out, and I'm no magician, I just look at this and I'm like, okay, I'm seeing some turbulence here because this also happens to be this rising uptrend line. And guess what? Uptrend, getting into an uptrend channel, it doesn't happen that quickly. It backs and fills. So same thing with stocks. So basically at this point, it hit exactly that level, 28.85. This was not September 6th. This was September 7th at 11 o'clock. And then the market pulled back. It didn't change the overall picture, but if you didn't take profits, your profit disappeared fast. I'm sure you guys remember that. It's just the way it is. We can't change the rules of the game. That's just the way the machines run uh, the poker table, called the markets. What's this here? Okay, so this is the 15-minute chart. It's very clean. I purposely left it clean without too many lines, and you can clearly see what's going on. If we break out of here, sorry. If we break out over 28.85, your stocks are going to run like a monster. Where do you want to be buyers? As always, around these levels and around these levels. What is this pattern? It's a complex inverse head and shoulder with the head here, left shoulder, left shoulder, left shoulder, right shoulder, right shoulder, right shoulder. The head still remains at the 28.65 level when the market basically was pre-market on the 7th. So this is your neckline. This is one more neckline where we closed, which we are in right now. You can see that. It's not magic. That's just the way it works. I'm just demystifying the markets for you is the favorite term now. And bottom line is that once we break out of there, it's going to hit another resistance, vacillate, might come down like this, create another shoulder. Bulls would like it to run all the way here, which is major resistance, the 28.93 level, which I showed you on the other chart. Bears would want this to fail, retest again the 28.65, 27 level, and then they'll short cover there, run the market. That's just the way the game's going to be played. Now, all this is dependent on what type of news flow we're getting pre-market regarding the trade stuff. What type of stuff, whether it's 6 in the morning, Donald decides to blast another massive, launch another trade missile at China or Canada. These are the major risks in the market right now. I really, truly wish that he stopped tweeting the trade stuff. Tweet about something else. Go attack Nancy Pelosi and Maxine Walters. I'm all for that, just to do that. But don't come in with some hardcore statements on things at 6 in the morning and then the markets get completely messed up. And I think all of you, I know all of you agree with me on that. It's just not the way to do things. So a lot of market players are very wary of that. We are following our charts. That's what we're doing. Now, very quickly, I want to show you, I was just setting this up. I'm going to show you a couple of other charts and I'm going to take a question or two. Certainly, given that you guys have taken the time to attend this session on a Sunday evening. I really appreciate that. And by the way, these sessions help me too because it forces me, Mr. Know-it-all I am, just kidding, to really refocus back on the charts. Otherwise, I'd be looking at them like quickly and not having to spend like half an hour really like explaining to people. I just look at them quickly and say, okay, I like it. And then I'll wake up at 4 in the morning, take a quick look at it, take the dogs out, maybe take another half an hour nap, and then at 8 in the morning, take a look at it and say, oh God, okay, it looks like crap again. Gotta go get back to work. Just the way it is, No one wants to see crappy markets at the open, right? We all agree on that. We want to see our things up so that we can sell. Then we re-enter. Whatever we do, that's what we do. So these are things that I like here so far. And this is the real-time chart of the E-minis on the daily. Now keep in mind, the dailies, I'm going to have to bring that board up just to remind everybody, that's all, even though you guys know all this stuff. Bear with me. So daily charts are basically for swing traders. Reduces, I know I've said this many times, I want to write it down, reduces intraday noise, which is basically news flow. Then the 4-hour and the 1-hour charts are for intermediate swing and day traders. Okay, and then we have the 15-minute, 5-minute. I don't really look at the 30-minute, 5 to 15-minute, primarily for day traders. And everyone can just do a combination of both, or some people are just day traders, so that's fine. Nothing wrong with that. You'll miss those big gap opens and stuff. So that's just want everyone to just, remember that. That's it. So daily, the swing trades, it reduces a significant amount of this quick noise. So that simply means that most other services will never tell you. That simply means you can't look at the screen. You can't look at the screen and say, oh my God, I just bought Google options at 8 and now they're down to 4. That means you got to either dollar cost average down or you just hold them and they'll get to where they get to because you're swing trading. You're looking at the overall picture. Or you buy SPX calls at 6 or 4, or if it's very short term, you buy them at 2 and they're down to 50 cents, 75 cents. Don't freak out because you have to decide whether you want to swing trade or whether you want to day trade them. You can't be like, you can't have your cake and eat it too. You can't hold your cake and say, no, it's so great, it's delicious. I just can't bite into it because if you eat it, your cake's gone. So you have to decide. Things, you can do all that stuff. So the daily, this is really important. And I noticed it tonight, thanks to all of you as I'm reviewing this. So the daily full stochastics is getting to a level where it normally turns. Now, it's not fully there yet, which is the bad news. The good news is it's almost there. And once it gets there, like it did back in June, you have I felt like saying it in New York City. You have a MOFO rally, which rips the head out of every short in town. Is it going to be different this time? No. Will the timing be a little bit off? Maybe. There's going to be one friggin' rally that's going to go test the new all-time highs, go past that, and boom. And it will happen very quickly before we have that big substantial pullback, which the market needs. But it'll happen from higher levels, in my opinion. So you want to take advantage of that. That's what we do. You don't sit around and say, oh, there's a big crash coming, so I'm just going to keep on shorting as I keep on losing money every single day trying to short the market. Which what most dogmatic bearish traders are doing, including some people in our group who are truly, seriously, even after all these years of being with Clueless Trading, are still always looking for Armageddon, which never comes. Because when Armageddon comes, you're not going to be alive. You're done. So who's going to trade for you? I'm dead serious. There are traders like that. But they do well on the pullbacks, which is great. But they miss out on all the big money trades on the long side, which are far more prevalent than the quick short trades that they do. So God bless them. So that's it. So once it comes here, it's going to basically make a substantial move, barring any major trade war firefight. And everything goes really fugly, not just ugly, but really fugly, okay? Then we are going to come down on the stoves and just kind of dribble around here. And at that point, we short. We don't short too hard because it can easily just run up. But what looks, through chaos comes order. Just remember that. It's a chaos theory. So through all the chaotic stuff that's happening on the trade front, Donald's tweets and stuff, will come order. And that order means big moves. And we have seen that happen repeatedly. All right? We see that happen repeatedly. So trying to short really big will burn you and throw you out of the game so fast it's not even funny. So let's talk in hand what we are seeing here. This is getting close. It's not there, fully there yet. What is there, which I like, which is in my opinion, a more powerful indicator short term, is your McClellan oscillator. The McClellan oscillators, ladies and gentlemen, is right now at the same levels it was back in the middle of June, where we had a substantial turn in the market. I mean substantial. We had a huge substantial turn in the market during that very heavy volatile period, which lasted from the February collapse, the big moves up and down, 600, 700, 800 point heavy vol moves. At that point, the McClellan oscillator went to minus 200. Now, this is technical stuff. McClellan oscillators do not, on the daily, get to minus 200 unless there is complete, massive unregulated, crazy volatility. We are past that stage. We have volatility now, but it's contained, and you can see that on the VIX. It's contained roughly between 10 and 15, and it overshoot to maybe 16 on the VIX. Here, the VIX was in the range of 20 to 25. Now, the bears in our midst will say the VIX will definitely go to 20 and it's definitely go to 25. Sure, it can. Sure, it can. But if we live our lives and our trading positions, that every day the market's going to be, that the next morning we wake up, China is going to basically bomb us, and Canada is going to, Canada is going to, I don't know what they can do to us, but whatever, flood us with pot, or cut off, oil and all that stuff that they sell to us. Well, yes, Armageddon can happen, but I don't live my life in Armageddon scenarios. So the realistic scenario is that the VIX is going to be between 10 and 15, and this is going to possibly turn from here. In my opinion, the McClellan oscillator at minus 135 is good enough for me to start getting really aggressive on my long buys. And the long buys in this particular case, we're talking about the indices, the SPX and the SPYs. Now, that's the internals. Let's look at the externals. Can everyone see the pattern? You don't have to look at the numbers and stuff, but just look at the pattern. See? So I'm going to draw a line here and leave it. Is everyone getting what I'm talking about? Because I know I'm talking, which makes total sense to me. But is everyone understanding? Because I'm explaining in very simple terms what's going on. Is anyone not getting it? That's what my question is. All right, great. So this is not rocket science, guys. You can beat the Goldman boys, which I've done for years and years, at the game of performance ROI. Trust me, by just using these simple things that I teach you guys. That's serious. So next time you're at a cocktail party out in the Hamptons or somewhere in Long Island or somewhere in New York, and the guys like talking all garbage, you can talk back. That's serious, okay? The McClellan oscillator is very important. Minus 35 on the daily. So you can slip and slide for risks that we talked about. I don't want to keep on hammering that. But that's pretty goddamn oversold on the daily. What else is oversold? Is continuous. 1, 2, 3, 4. Look at the spikes here. When was the last time? And this is something you guys should always do. Count these are called day counts. What was the last time? Yeah, here was the last time we actually had a 4-day pullback. 1, 2, 3, 4, all selling. What happened on the 5th day? Big move up. 6th day, a down move. And then the market started to ramp like crazy. We generally don't get this systematic 4-day, look at that, volume bars of roughly 1.6 million contracts being systematically sold. That's called capitulation in my book. Where is that mostly coming from? Emerging markets, Europe, China. A lot of hedge funds blew up. Everything that I talk about in my webinars, I can assure you, 90% of the time you're going to hear the same things on CNBC within a couple of days. That's serious. Same things that I'm explaining to you guys right now. I told you guys last week, a lot of hedge funds blew up based on the currency factors. They have to sell their other stuff. This whole boom sell-off that we saw in techs a couple of days ago. Like, oh my God, what really happened? It's them just having to sell their tech positions to come up with the margin money to pay for their other stupid positions that the margin clerks are demanding to be satisfied. Forced selling. Bob Pisani talked about it. Finally, that's why you get those type of sell-offs. There's no other reason. What, all of a sudden the tech industry, which is the biggest growth industry in the United States and the world, they just stopped? Oh, privacy concerns, because a bunch of idiotic senators from both sides are bullying our greatest companies into privacy concerns. That's like the stupidest thing ever that I've ever seen. Government regulating free speech from whichever side. Now you can go really nuts. Free speech doesn't mean you're going to inflame somebody so the guy comes over and shoots you because you look different. That's not free speech. That's savagery. But general content, sure, let it go. Let people, fight it out, discuss it out. They don't have to fight it with guns. That's what a lot of other countries do. We're a little bit more civilized than that, I'd like to believe. You can have a big disagreement with your neighbor about policies and what do you think? You don't need to shoot him. Seriously, we need to start getting a little bit more civilized, if you ask me. I know we are at Clueless 8, but I'm talking in general. So let's talk about, let's look at actual patterns here. I really like these patterns, and you guys should like it too. You know why? Because I put nice colors on the charts, right? To attract people's attention. I'm not kidding. So one thing that happened here is, like I've mentioned several times, is you have the moving averages, 34 and the 50. Despite all these pullbacks and stuff, the 34 and the 50-day moving averages continue their beautiful momentum upward. That's all you need to know. They're moving higher. They're just nicely moving higher. Now, every time you deviate, this is your main highways, right? These are your main highways. So every time that you deviate too far from your main highways, your standard deviation, that's what it's called, goes higher. So this was a standard deviation, I'm guessing, but just looking at it visually, I don't have the exact number in my head, it's probably around +4. That's overbought. So we got overbought. Not rocket science, guys. We got overbought. So once you get overbought, you need to reset. Profits need to be taken. Different reasons are given behind it. Emerging markets, privacy, they just killed, they're going to just put strict rules on every single, nothing's going to happen. U.S. business is going to eat the stupid politicians alive, and I hope they do. This country should be given to U.S., the greatest corporations in America to run, honestly. This country should be run by algorithms, not by stupid political affiliations, if you ask me. That's serious. Just how about algos running the United States? I think it'd be beautiful. They just take the best, boom. That's the best policy, let's do it. Not like waking up in the morning and say, okay, I'm going to go ahead and do this now. You think I'm crazy? I'm being dead serious, all right? So bottom line is, let's look at the technical part of it. We got overbought, we got oversold. Standard deviation got too far away. This moved too far away from the moving averages. We came back to the moving average. This lovely blue line is your 20-day moving average. If we slip below that, we got moving averages here at 28.56. Said that repeatedly. That's your 34-day moving average. Worst case scenario, we can plummet down to the bottom of the channel and go below the 50-day moving average, which we have done many, many times. And every single time, the media, retail emotional investors like, oh my God, that's it, it's all over. We'll never buy the market again. And what has the market done? As long as the primary trend is higher, it has bounced, and it has bounced ferociously over a short couple of days. And that's exactly what's going to happen again. The problem is we don't know the exact timing. Now, do I think that this 20-day moving average should hold? Yes. Why? You guys can answer that, because I just showed you that these things are getting extreme oversold. Can it slip and slide a little bit more lower and lower to the 50-day moving average? I personally wouldn't like that, but I would certainly be shorting, very quick shorts intraday. I wouldn't be holding my shorts overnight, because every time you've tried to hold your shorts overnight, 90% of the time, you've lost money because the markets open up big. Because the resets can happen, E-mini resets do happen overnight. So looking at what's in hand right now, there was your bull flag. We slipped out of it. I expected the bull flag to hold, but then stuff happened on the trade side, right? And then that stupid congressional hearing, Senate hearing on dragging in our finest companies to explain why they do what they do. I mean, I can't even tell you. Personally speaking, I'm so disgusted with the process. It's not even funny. This is what the Stalin would do. This is what like these hardcore communist dictators would do. Bring in private business and grill them. For what? Waste of taxpayer money, complete garbage. But they have to show that they want, what do they want? They want to control every social media that's out there. It is so pathetic, guys. I don't even want to even get into it. And some of you who are a little bit more thinkers about social policy, you know exactly what I'm talking about. Mandating what can be said or not said. What the hell is going on? Seriously. Anyway, let's move on. So that's the reason why these things fell. Big billions of dollars worth of value raised. So gives us an opportunity. If this works out right, we're going to do this. We're going to make a lot of money. If it slips lower, below the 2864 level, which is the breakout level, right? This was the breakout level which I had correctly pointed out. It was a W formation. It was a cup and handle, and it was an ascending triangle from here. Whichever the case, that broke out on the 24th of August. Many of you missed it big time. Don't miss it again. Don't miss it again. So from a simplistic standpoint, please watch what I'm showing you. It's very simple. It's not hard. I've said this before, and I'm saying it again. Markets will come and retest for whatever reasons. The breakout level. That's exactly what we did. That's exactly what we did. Magic. That's exactly what we did. I'm going to keep on saying it until it gets through all of you. 2865. That's where we broke out of. That's where it retested. It's no magic. So that retest, now it's going to attempt to do this. Get back into the bull flag around the 2900 level. There's going to be some back and forth. Maybe it comes back and retests the 2856. I'll certainly be keeping a very close eye on the shorter term charts for that, because once it hits this level, expect to sell your tactical profits. Because they will sell the market at that point. Will it overshoot and retest the highs, 2917? Sure can happen, for reasons I explained earlier. So there's no magic to this, guys, okay? This is transparent, demystifying the market, as I'm going to keep on repeating from now on. We're demystifying the market based on technicals. But so far, as long as these lines keep on moving higher, you want to be a long buyer and a buyer on tactical dips. Does everyone understand that part? Yes, no, maybe?
Yep.
Okay, thank you. And I hope everyone else does. This is the upper end of the channel, the 2938, 2940 level. Once it hits there, it might have an overshoot. That's a low probability move. Once it hits the upper end of the channel, expect a nice movement, in my opinion, where it comes back and retests the 2838 level again. That's exactly what the markets have been doing. Don't try to reinvent the wheel. Through all this volatility, all the market's doing is going to the upper end of the channel, retesting the bottom, going up, retesting the middle. So it doesn't, or getting close to the bottom. Doesn't always have to hit the bottom. But that's exactly what it's going to do. When do I think this is going to happen? Which is basically if we, 6, 7, 800, 900 type of points. Most probably going to be second part of September, early part of October. So don't get too excited just because the market's moving up towards this level, because that's the time that you're going to hit the roadblock. And these channels are so precise, it's not even funny. All I did was just draw a parallel, channel going all the way back after the volatility started to subside back in April. So that's your daily E-minis. So these things showed up to me. Don't want to keep you guys too long. I'm going to show you very quickly. This is the Swing 533. Let me get this guy. Is it time to retire? Traders never retire. They keep on traders never retire. You know why they don't retire? I'm technically retired, right? Because I basically got my own thing and I trade my own book and have my own service. Technically, I'm retired. Why do traders don't retire? Because when you retire, your brain doesn't work anymore. And if your brain, this is fascinating stuff. My mind is working like a machine all the time, and I love it. Maybe that's why I look a heck of a lot younger than my age. And I sound a heck of a lot younger than my age. Well, thank God for everything. So the bottom line is, keep thinking outside the box. Be a smart trader, not a dumb trader listening to everyone out there. Listen to everyone out there. Take that information, process it, use my tools, and see the difference it makes in your P&L. Some people blindly follow me and do great. Great, but I want them not to be blind. Use your own intuition. Use the other information that's coming through. And use my charts. So bottom line is, this is what we're looking at here. Every time it gets to its, oh, come on, choose pen color. Thank you guys. Sorry about that. So every time it gets down here, this is the swing 533. Very reliable. Look what's going on. Every time the stows get down here, you tend to get a turn. Every time you get a turn, you get anywhere from a 3 to 5 day rally. Bull flag, 3 to 5 day rally. Consolidation channel. This is the one that, like I keep on saying, always screws up traders. Like, oh my God, what's going on? You know, the world's falling apart. And boom, it goes. So bottom line is, let me clean this out. Boom. Now we are here. We are down here. Once this starts to curl, and I'm going to show this again tomorrow during the day. Once it starts to curl like that, you can literally buy blind and just do a fantastic swing trade for a couple of days. Of course, you have to watch your things. Because when the stows cross over, it still hasn't crossed over. It's getting there. The McClellan oscillator, the MACD is negative now. Nothing that crazy negative. Can it go lower? Because I watched this too. Yes, in that case, this turn is not coming. And that means that if Donald just goes completely ballistic on his threats, then that turn is not going to happen. I just want to warn you guys. It'll slide lower. And my slow stows we will hit the lower end of the 2800s. It's going to be very ugly on the front side with individual stocks. But so far looking good. What else do I like about this is on the RSI, which is basically the root of the stochastics, the relative strength index, is now below 10. Every time it gets here, we tend to get a turn. Can it slide sideways? Yes, for the reason that I just explained. If he goes completely ballistic and starts implementing these things without any negotiations whatsoever, then the markets will go straight down towards the 2800 level. A couple hundred points real fast. Aside from that, you should get a turn. And we have seen that every single time going back to April. So that's your swing 533. I'll be monitoring it very closely. You cannot replicate this chart even if you try it. A good friend of mine from Canada, believe it or not, sent it to me a long time ago, many, many years ago. And I just kept that thing. I know how to set it up. On the ACS, I actually show people how to set it up on the advanced coaching sessions. And it's a really reliable indicator, very reliable for people who want to hold on to things. Just the way some unknown person said, and thank you very much, MB, on the testimonial, that you probably wouldn't have held things. And remember, big money's done on holding things. But that's my contribution on what I do. All right, let's look at the second thing, and we're going to close out. Is now while we're doing this, just want to remind you guys that be selective in things that you buy. Just don't randomly go out there and say, oh, Google's definitely going to go higher and stuff. Now, I can't cover all the stocks in the universe of stocks that I trade. You guys know that. Time factor, I'm not running a staff of like 10 people. But you have to be selective. So I try to go for the ones which are going to make the biggest bang for your buck. So, and again, remind me sometimes. Sometimes you guys have reminded me and we have just gone boom with those and made a lot of money. So certainly do that. This is your McClellan oscillator. I'm liking it a lot. A lot, as we say in England. I'm liking you a lot, darling. All right? So I'm liking it a lot. Why? Because the frigging McClellan oscillator is at minus 46. Can it slip a little bit lower and hit minus 60? Buy with hands tied to your back. Just buy. If it hits minus 60. All kidding aside, I'm serious. I'm liking the fact that the McClellan oscillator is at minus 46. Just look at the visual. What happens every time it gets there? You get a big snapback. It happened May 25th. It happened end of March. Normally, McLaren oscillators will have quick pullbacks and they'll come down towards. And if you want to know the definition, visit Investopedia. Tom McLaren, the son of Mr. McLaren, I think it's Tom McLaren Sr., who invented the McLaren oscillator. It is a phenomenal trade management tool. Phenomenal trade management tool. Telling you guys right now. So look at the full stochastics. And these I add to the McLaren oscillator to get a cue. It's at 0. What happens when it goes to 0? It tends to turn higher. Can it move sideways? Sure it can, for reasons I explained. But generally, what does it do? It starts to turn. And when it starts to turn, you get that 2 to 3 day window. Not, 4 weeks we're going to go higher. That's what algos do. They run the market for roughly 2 to 3 days or 1 to 2 days. Got to capitalize on that. Got to capitalize on that. Have those shooting the fish in the barrel moments because you were set up earlier and sell at will. How beautiful does it feel? And I know many of you have done that too. Just to sell at any price you want because it's just shooting higher. And it shoots higher than what you thought. Look at booking.com, what happened on Friday. We got them at 50 cents, 60 cents. We sold them north of $3. Some traders sold them north of $2. From 50, 60 cents. But you have to be quick on them. So somebody said, how can you be that quick? Well, put a sell order out there at $2.50. They'll take it. That's 500% in profits for just buying something that I told you guys to buy. So, McLaren oscillator, liking a lot. Minus 46, can slip a little bit lower. Futures are up about 5 right now. So when it turns, it generally tends to go green. Now these parameters I put, pivots, S1, all that stuff, generally tends to go green. This is actually a dark green. And once it gets overbought, back in that 30-39 level, you can see that, market sell-off. RSI, by the time it starts to turn, McLaren oscillator is going to go like this. Now, this doesn't mean a straight line up. You get a lot of intraday chop. This is updated. I just have the McLaren oscillator on this particular venue. This is stock charts, which is calibrated at the end of the day. You can track the McLaren oscillator on a real-time basis directly on what I just showed you on Thinkorswim. So that's it, guys. It's a lot of good information, actionable information. We have great stocks. We have that penny stock that Bob gave us, and it's a great lotto trader. A big shout out to Bob, okay? Longtime member, great guy. Which went up, what, 600-700%? I mean, I couldn't believe what was going on. But what can I believe? I've seen a lot of financial pornography in my lifetime. That's what I call the markets, financial pornography. What else would it be? One of my talking to somebody that we went to dinner with, and I said, we can do 600% in options. They're like, yeah, right. He's a big shot on the tech side. Tech side, real estate. He's like, yeah, right. Like, fine. So go to my Instagram, go check it out. He checked it right on his phone. He's like, holy crap. I said, that's what we do. It's called financial pornography. Don't anyone, not offending anybody's sensibilities. That's what we do. Big money gains, all right? In the meantime, try to manage the trades. Let's not flip out every time the market is down 30, 40 points. I'm not a raging bull, but based on what I see here, we will most probably retest the highs. There's a lot of risk in the market, covered all that. So far, so good. So have a great evening. Let's have a great week, guys. 9/11 is Tuesday. Let's say our prayers. And let's not get too greedy, because remember what happens in the middle of the month. We get major chop, and that starts off onto the 14th. Middle of the month starts off on a Saturday, the 15th, and plus minus 2 days from the 15th. That includes the 14th of Friday. I'm talking about business days, trading days. And the 17th and 18th and 19th are going to be very tricky. So let's keep that in mind. All right. Have a great evening. God bless you all. See you guys tomorrow morning. Thank you for attending.
So long.
Thank you, sir.